Where we bring you stories from the Nigerian markets, capital and financial as it relates to the economy. Today, Thursday, July 30th, 2020, is the first day of the 2020 celebration of Eid al-Kabir, and Muslim brothers and sisters across the world are celebrating. So it's a public holiday marked in Nigeria, and of course, a lot of you are home and watching this program. Let's give you a lineup of what we will discuss today. First, we'll be reviewing market performance. We're looking at pro-share analysis on Airtel Africa's first half of the year 2020 performance. FBN's Quest analysis on International Breweries PLC performance will also come to the fore, and we'll give you corporate results that have been coming in for second quarter of 2020. Let's begin with the Nigeria Stock Exchange over the week. The week closed Wednesday, that's yesterday, and investors gained 138.76 billion naira week on week as the NSE ASI inched up by 1.09% to close the week positive. So it was a positive week for the equities market. Let's go on to the bonds, fixed income, money market space. First, this is published by Zequest Capital on ProShare. The federal government of Nigeria bond space closed the week on a rather sluggish note as the market seemed to have dived into holiday mood from the early hours of yesterday's trading session. The market started slightly bearish as trading activities kicked off at the tail of the curve. The 2034s, 2035s, and 2036 papers were involved, with the 2035 maturity garnering most of the market love and its juicy offer easily matched with the available bids in the market at 9.10%. However, by midday, the market gradually slided into a drab tone with less aggressive bids and more offers shown from the belly to the tail of the curve. Zequest also saw few trades settle at 9.8% levels on the 2049 papers, while the average yield on the benchmark curve expanded by 6 basis points day on day. Zequest expects that next week there will be more maturities roll in and local investors will select few bonds offered at attractive levels. In the Treasury bill space, activities in the Omo bill space dragged for most of the trading session as the market remained poorly offered across the curve. Buyers took their stance, resisting offers despite the pressure to invest due to the rising market liquidity. May and June's bills were offered at 3.5%, while September to December dropped to the late 2% levels. By and large, yields compressed slightly by an average of 2 basis points across the Omo curve. The NTB space stayed very calm as attention shifts moved to the PMA auction, that's the primary market auction of yesterday. At the primary market auction, the DMO, Debt Management Office, successfully issued 265.95 billion naira, the same as the amount on offer amidst a pretty healthy demand with an average bid to cover of 2.04 times across the 3 tenors on offer. Rates also dropped by an average of 55 basis points on 91 days and 192 days bills, while slightly increasing the first year paper by 5 basis points. Zequest expects activities to peak slightly in the NTB space next week as market participants sought to fill their outstanding orders from the auction in the secondary market, especially on 91 days and 182 days bills respectively. In the money market space yesterday, the interbank system liquidity opened on 767.20 billion naira positive, staying adequately buoyant. However, Zequest saw a slight increase in the overnight buyback and overnight rates for another consecutive session, although less significant for any impact, with its rates closing at 1.4% and 2.10% respectively. Zequest expects the market to remain at these low levels as there is no significant funding need to drag the market upward, especially early part of next week. For the forex market, at the interbank FX market space, the naira and dollar spot and SMIS rates remain stable to close at 281 naira to a dollar and 280 naira 69 kobo to a dollar respectively. The I&EFX window, on the other hand, saw the slight movement as naira depreciated against the dollar by 25 kobo to close at 289 naira 25 kobo to a dollar. The cash and transfer market, however, remained for another consecutive session as the market slipped into holiday mood while transactions slowed significantly. Let's go on to the Eurobond space. The Nigeria sovereign tickers traded on a muted note as calm was seen throughout the curve yesterday. While Zequest saw offers for maturities around the 2025s to 2031s, yields strengthened slightly in the market compared to the previous day's levels, compressing by an average of 3 basis points across the curve. From the Nigerian corporate stickers, it also had a quiet session yesterday, with the only movement coming from the EcoBank Transnational International Papers 2024 and that of Fidelity Bank 2022s. This compressed by 38 basis points and 22 basis points respectively. That's the review for market activities for the previous week. Let's get on to the interesting analysis for ProShare Research on Airtel Africa's first half of the year 2020 performance. And just to let you know that Airtel Africa is a big player in the telco space in Africa and in Nigeria, second to the major players, MTN. So let's look at the key highlights from the analysis. Customer base grew by 11.8% to 111.5 million across board. Revenue increased by plus 6.9% to $851 million, with constant currency revenue growth of plus 13%. There was a constant currency revenue growth that was recorded across all key business segments, with voice revenue up by plus 2.2%, data revenue by plus 35.7%, and mobile money by plus 26.3%. So you can see that data was the big one. Underlying, the EBITDA increased by plus 7.9% to $275 million, with constant currency growth of plus 14.6%. Reported, Airtel Africa reported underlying EBITDA margin, which was 44.1%, up by 40 basis points, which is 61 basis points in constant currency. In terms of operating profit, it increased by plus 12.9% to $210 million, which is an increase of 21.5% in constant currency. It also had free cash flow, which was $96 million compared to $62 million in the same period of last year. Earnings per share before exceptional items was $1, and basic earning price per share was $1.01. Its net debt to underlying EBITDA was 2.2 times compared to 3 times in June 2019. From the analysis, there were expectations that Airtel Africa PLC, telco, would be a major growth stock in a period of COVID-19, but the narrative seems different. In its first half of the year 2020 financial statements, the company noted that COVID-19 impacted customer usage pattern, particularly during April 2020. However, as restrictions were lifted, customer usage trends in May 2020 and June 2020 returned to being broadly consistent with pre-COVID-19 trends. The company's first half of the year 2020 result bucked analysts' expectations, as the underlying assumption that physical restriction of movement of people would translate into higher phone usage by way of increased patronage of voice and data platforms was only mildly correct for voice usage, but accurate for data patronage. There were expectations that Airtel Africa PLC would also be a major growth stock in this period, and this really changed the whole narrative for Airtel. Let's go forward to look at the other aspects of its performance as a leading telco company. Now, given prior assumptions, analysts had expected that Airtel would witness major growth in both top and bottom line revenue for the first half of the year 2020. However, the company's first half of the year 2020 result played up only a slight increase in top line earnings by plus 6.9%. Airtel's first half of the year 2020 revenue rose from $796 million in June 2019 to $851 million in June 2020, while it recorded a deep decline in profit before tax, which dipped by minus 33.4%, as profit before tax declined from $167 million in June 2019 to $111 million in June 2020. So for those of you who want to understand, who felt that it was a smooth ride for telcos, you now see the trends to get further insight. And that's what ProShare Research does for you, give you breakdown analysis on reports of quoted and major companies in the country. Let's go on to some corporate announcements, which really is coming in, of course, expected for the second quarter of 2020. And FBN Holdings PLC released its second quarter 2020 unaudited results for the period ended June 30, 2020. Here are the key highlights. First is that gross earnings grew by 5.7% to 296 billion naira from 280 billion naira in the previous quarter. Profit before tax grew by 14% to 41.4 billion naira. Profit after tax grew by 56% to 49.5 billion naira. Net assets grew by 6.5% from 661 billion naira to 704 billion naira. That's from FBN Holdings. Let's get on to FBN Quest's research analysis on the recent International Breweries PLC second quarter 2020 results, what it has to say about the results and key takes. It showed a modest increase to earnings forecasts and target price. The results suggest that volumes declined by double digits, that's year on year, from International Breweries PLC, largely because of the lockdown during the quarter. This marked the biggest volume loss since the company's merger in 2017. That said, pre-tax loss improved by 18% year on year on the back of a 19% year on year decline in operationals, and a 6 times year on year increase in other income. Indeed, amid the lockdown, International Breweries PLC cut spending on promotional activities by half. This drove the operational cost decline. Also, gains from derivative and sundry income booked for the quarter boosted other income. Now, looking beyond second quarter, FBN Quest looks at the fact that it will see sustained pressure on volumes because of subdued demand. It also expects competitive and foreign exchange headwinds and the likely non-recurrence of other income to squeeze earnings. FBN Quest has made modest cuts to its sales and gross margin forecast in response to -9% and -7 basis points negative surprises, respectively, in the first half of the year 2020. Nevertheless, the cuts for 2020 are offset by favorable adjustments to OPEX and other income. As such, the 2020 pre-tax loss forecast is now 35% lower. FBN Quest, however, models an average increase of 6% in its 2021 to 2022 pre-tax forecast. That's pre-tax loss forecast, which is largely driven by market cuts to the interest incomes estimates, considering the lower yield environment at the moment. Essentially, FBN Quest forecasts an average decrease of 8% to pre-tax losses for 2020 to 2022. The new price target is 6 naira 9 kobo, which is 15% higher because of the rollover valuation to 2021. Year to date, International Breweries PLC shares have sold off by -65%, underperforming the broad market by -57%. The new price target from FBN Quest research target implies an upside potential of 109%. Despite the considerable upside, it retains its underperform rating for the following reasons. First, the market continues to discount the valuation argument. Second, it sees the bearish sentiments persisting given negative earnings over forecast years. That's for the International Breweries PLC, the analysis from FBN Quest. Let's go on to Mutual Benefits Assurance PLC, who has released its second quarter 2020 unaudited results for the period ended June 30th, 2020. And here are the key highlights. Gross premium grew by 5% to 10.2 billion naira from 9.7 billion naira in the previous quarter. Profit before tax declined by 4% to 1.7 billion naira, while profit after tax grew by 10% to 1.6 billion naira. Net assets grew by 10% from 14.5 billion naira to 16 billion naira. Unity Bank also released its 2020 second quarter unaudited results for the period ended June 30th, 2020. And here are the key highlights. Gross earnings grew by 11.3% to 22.9 billion naira from 20.6 billion naira in the previous quarter. Profit before tax grew by 6.5% to 1.12 billion naira. And profit after tax grew by 6.6% to 1.03 billion naira. Net assets stood at 278.64 billion naira. Prestige Assurance PLC also released its second quarter 2020 unaudited results for the period ended June 30th, 2020. The key highlights show that its gross premium grew by 4.7% to 3.9 billion naira from 3.7 billion naira in the previous quarter. Profit before tax grew by 84% to 850 million naira. while profit after tax grew by 79% to 620 million. Net assets grew by 79% from 8.4 billion naira to 9.1 billion naira, telling you that results have been trickling in. Law Union and Rock Insurance PLC released its second quarter unaudited financial results for the period ended June 30, 2020, and here are the key highlights. Gross premium declined by minus 2.65% to 3.2 billion naira from 3.3 billion naira in the previous quarter. Profit before tax grew by 81% to 219 million naira. Profit after tax grew by 81% to 186 million naira, while net assets grew by 14.8% from 6.4 billion naira to 7.3 billion naira. That's from Law Union and Rock Insurance. Just to let our subscribers, viewers, to note that ProShare, once again, we always come here with interesting insights, analysis. And from the stable of ProShare, we have now the CEO Renovation 2019, the first part, paying the CEO in a pandemic, the unanswered questions. This very incisive report is looking at different levels, understanding the remuneration of CEOs and how the pays is being carried out and what is really happening in that regard. It also brings out observations and review of executive compensations to CEOs and how the financial affairs are being managed. That has been released on the stables of ProShare, and we will bring you further insights into that report from tomorrow. But it just shows you once again how during this period of the pandemic, as usual, we've continued to engage the market, bringing out interesting developments and issues that should be of interest and concern to stakeholders in the market. And this again comes with a very incisive analysis, cutting across sectors, cutting across various segments of the market. And this is one report you would want to read and engage on. And so for you to get that report or download it, you have to go to www.proshange.com and get onto our site, and you'll see the CEO Renovation 2019 report. You just need to read through, and we would like to get your feedback. If you want to send your feedback on that report, you can send it to research@proshareng.com, and we'll be glad to get your feedback on the report, what you think about the CEO Remuneration report. Globally, you know that remunerations for CEOs' compensations are issues of discussion in climes like the US, UK, Europe. It's always a big discussion of how these are being carried out, particularly in periods of challenges and crisis. There are learning points from it. So it's a very welcome development, once again, from the stable of ProShare. And that's what we do. Market intelligence, incisive information, and empowering you to make the right investment decision. Of course, we're in the month of July, and we're ramping up the month. It has been a very, very busy month for the Apex regulator, Securities and Exchange Commission. They've engaged several players, House Committee on Capital Markets. They've been discussing with stakeholders at every forum and opportunity to galvanize the market, to remind the market of the role of market surveillance, to once again give her that warning that there will be no zero tolerance for market infraction from stakeholders, and their commitment to particularly getting back on board retail investors, because post-2009 financial market crisis has been working around that effectively to see how they can boost investor confidence. But another part of it is investor protection, which is going to be given a front burner focus in this dispensation. Also, we'll be expecting that beginning of this year, we've not had the Capital Market Committee forum, which is very critical to see the direction of the capital market. We expect that the new leadership will take that into consideration. We know that, yes, there are restrictions due to the pandemic, but leveraging digital and getting all stakeholders on board is very important to take critical decisions around the direction of the market. So we'll be expecting, as the month wraps up at August, we should get a clear statement on that regard, because it has become very imperative. Like we said yesterday, the debt market continues to be a sweet spot where we see particularly corporates engage more, from Mixta to Dangote Cement to Guinness to Lapo, Microfinance Bank. We've seen in Nova Merchant Bank, we've seen the access or participation in that market increasingly as a way of raising funds and boosting activities in the market, and we'll continue to monitor that and bring that update to you. Of course, there was a very important statement from global central banker. We'll call him the major man when it comes to central bank decisions. Jay Powell, the chairman of the Federal Reserve Bank of the US, issuing a statement at the Fed meeting, said, of course, the pandemic is still affecting the projections for America's economy. Note that this period, the Fed has put interest rates at 0 to 0.25% levels, keeping it very, very dovish, watching the trends in the market. So he says that COVID-19 will still continue to impact America's economy and, of course, the global markets projections. So for those of you watching the trends, you always take a lead from what the Fed is saying, then you know that it still calls for caution this period in terms of investments. The impact of the pandemic is still there. We have over 16.5 million cases of coronavirus confirmed across the globe. US is still the major leader in terms of the spike of cases, so that, of course, has its impact on the markets there. Brazil, the biggest large South American country, is second. Third is India. And then you have even South Africa. Africa's leading second largest economy, I meant to say, is in the top 5. So these are big economies who have impact. Even the UK is in the first 10. And this has its impact on the markets. Also, in the course of this month, we saw that the European leaders were meeting extensively, and they finally agreed on the 750 billion euros fund to support recovery from COVID-19. There were a lot of issues initially, from Mark Rutte, the Prime Minister of Netherlands, even to Chancellor Angela Merkel, in terms of how this will be managed and how it will impact the whole of Europe. But they've resolved that, and that is why we're seeing some rally in the European stock markets, and we continue to monitor that as it has to impact on the economy. But majorly this month, we've seen a lot of activities around the development of vaccines for addressing COVID-19. Note that the global market and economy have been taking a lead from the research, the innovation, the tests, and all the efforts carried out to bring vaccines. And so from the activities of AstraZeneca and even down to Moderna, who are working out round the clock to see how they can get vaccines, we're seeing some traces of progress. And it was winter into the month of August. If there's a huge breakthrough and the increased cases of response to those vaccines are positive, definitely we expect that the markets will begin to brace up for a full recovery of economies. In terms of full recovery, yes, it's still not full recovery in terms of reopening of economies across the globe, and this is also having its impact on the markets. The Nigerian markets have continued to leverage digital platforms to carry out their operations. That is one of the most interesting stories this year. Despite the pandemic, all the major exchanges have still been operating and carrying out their trade and operations, and leveraging digital has been their big innovation driver. And so that speaks again to being proactive. Despite all the challenges, the Nigerian market proved itself as one that can be proactive, innovative, and responsive to the trends and the developments of the time. Also, we're expecting the second quarter report from the National Bureau of Statistics in terms of capital importation, and it has been challenging in terms of getting the foreign portfolio investors. They also always look at the foreign exchange markets, and yeah, the Central Bank of Nigeria activity in the import and export FX window has not been deep as expected. So that is one trend that will be monitored as second quarter 2020 capital importation report comes out. The foreign portfolio investors have continued to be dominant back to back in terms of activity. Over 70% of the last capital importation report showed that it came from foreign portfolio investors. So will that change? Will there be a reduction when that report comes out? That is something that we'll be looking at. So much to look at. And tomorrow we'll be taking a review again of the month of July, activities in the capital market, what were the key things that happen that shape the market. You don't want to miss it. You want to be part of it. And glued to your set. Second day of the public holiday marking the Eid al-Kabir Muslim season. You don't want to miss that interaction and information that will give you the right direction. And that'll be all for the market review today. Join us throughout the week, and tomorrow we'll wrap up the week with analysis and exclusive interviews and the Nigerian capital markets. Also log on to our website, www.prochange.com, to get all the videos, news stories, and reports you need. And to all our investors and the public, we want to remind you that as we continue to bring this program to you, we're also concerned about your investments and your financial health. So please avoid platforms that promise you 100 to 200% returns that are not registered or regulated by the Securities and Exchange Commission. Do not give in to their schemes and strategies, because you do not deserve to lose your hard-earned money and savings to such schemes. That'll be all for this edition. Let's make it happen again tomorrow as we wrap up the week. Thank you for watching. Have a lovely day, and please stay safe.